Hello, and welcome to Credibly Challenged, a podcast about risk management in the banking industry. My name is Matt Bisanz, and I'm a bank regulatory lawyer at the law firm of Mayer Brown. Today I am joined by Nicole Kitowski, Chief Risk Officer of Associated Bank, a large regional bank. She has been gracious enough to join us today to talk about her long career in risk management and with banking organizations and share some of the insights that she's gained over that career. Thank you, Nicole.
Glad to be here.
So to dive right into it, when I was looking into your background, you've had a fascinating career in that you've been with Associated for your not only your entire career, but your entire adult life. That there's a story going back to when you started it sounded like a teenage teller with the bank. What made you stay and seek new challenges within one institution?
Yeah, I started in the teller line when I was 17 years old, joining an institution who had an office directly across the street from my high school, so I could pop over as soon as classes were done. And I certainly at that time did not think that banking was going to be my final destination in a career journey, but Associated Bank was a great fit for me. They really did a great job of communicating, creating a team and engagement. And they also did a great job of offering opportunities by way of career progression. And progression isn't always linear. In some cases, it's entirely different fields. So as I got my accounting education, I did an accounting internship. And then when I decided to get a computer science degree, I moved into the technology department, ultimately ending in the risk department. I've been able to sample a bunch of different careers and a bunch of different types of skill sets and growth and experiences within a single organization, all while they supported that through ongoing training, supporting through educational reimbursement and opportunities just really across the board.
And how was that transition? I think particularly for this audience from information technology to risk management. Like, what did that involve? What were some of the maybe the pain points in making that transition?
It was probably the scariest career move that I made. I love technology. I did not want to leave technology as a career. But what I learned in spending some time in risk management, specifically around anti money laundering and the fight against financial crime, is that risk contained a lot of technology and data analysis to be successful. In fact, I was perhaps one of the earlier chief risk officers in the mid-sized bank space to have a technology background, but I'm no longer the only one. It is a very heavy system requiring an immense amount of data and anomaly detection to be successful. So it was scary to move into something that felt like it was moving away from what I had invested by way of educational background and experience, but it really just enhanced my ability to do that job in risk and then to look at banking from an entirely different perspective, and really fell in love with the fact that we are safeguarding our bank, our customers, our communities by doing this well.
I think some of your larger peers that they have thousands of people involved in the AML and financial crime functions at all levels, and I think one bank I remember saying it had something like 10,000 people involved in financial crime compliance. It sounds like you came in at a fairly senior level because of your experience and your knowledge of technology. So when you came into AML risk, you were able to come in at a more senior level. Would you recommend to people starting out at a junior level in that type of risk management area, or was your diversity of experiences coming in at a more senior position something that you think is I'll say a better approach?
I really don't know that there's a wrong way to get into risk management if you don't have all of the varied background in banking. Coming in as an analyst and learning the ropes, I think, is very beneficial. From my perspective, having been a teller, having been a banker, understanding how transactions flow and how banking just works in general, especially the accounting and finance side of it, I think that my background really afforded me the opportunity to jump in. I was a program manager, really remediating an effort, but one of the first things I did do was go and get some additional training and a certification in anti-money laundering. And then from there, the rest of it really just applied very well. So I think either way works. It's really what does your history consist of to be able to make the decision for you.
That's helpful. And when we do talk to people across banks, and particularly in the business where you used to work, one of the things as a lawyer I often hear is that they want us to add value beyond just the legal answer. That it's really easy for a lawyer to say, no, you can't do that, or I don't think you should do that, or or maybe as a risk manager, you say it's risky for you to do that. Um, and the business though isn't necessarily there to minimize risk or minimize legal exposure. That there's an inherent level of risk to being in business. There's an inherent level of legal exposure to being in business. Like someone will sue even the best run business at some point. So I often get asked, how do you add value beyond just providing legal advice? And so I'll ask you, how do you add value beyond just managing the risk or mitigating the risk?
I think it's important in risk careers that we do understand it's not all black and white. There is lots of shades of gray. We have to meet regulatory requirements without exception, of course, but the rest of it, there is a risk assessment balance, as is the case in most industry. What's your likelihood and impact? And where we add value the most is when we can take a look at that objectively and compare it to the rest of the business line goals, including customer experience. Often, if you are reducing the company's risk in financial crimes, it also increases the complexity of banking with you as a customer. So you need to be able to bring the perspective of balancing customer experience, profitability, and the value of your decision in a risk-based approach so that you can make the best possible decision for your company.
Sounds like a lot of what you're describing there is the culture of the bank and what makes each kind of bank unique as it picks those levers of customer experience, of relationship building, the different ways that banks distinguish themselves. And I realize you're the chief risk officer, so you do have a portfolio within the bank, and maybe I'd like to talk a little bit about that culture and how you have built that and what you have seen at Associated. So maybe if you could tell me a little bit about how you have structured or where you guys fit into the risk management framework of the bank.
Sure. As the Chief Risk Officer, I report directly to the CEO, the Chief Executive Officer. We really are second line in control structure. I have teams that are dedicated in compliance, operational risk, financial crimes, information security, IT data governance, uh, credit risk review, all of the various components of risk. So that's really how we're structured. And our culture really is one of integrity, transparency, communication. We definitely want to be partners with all of our lines of business. Where we really shine, I think, is when we can understand and collaborate to get to the best risk-based decision for our customers and continue to safeguard the organization, which of course is our ultimate goal, making sure that we don't have any issues when it comes to regulatory compliance or quite frankly, going into risks that are unacceptable to
Mhm.
sustain a well-functioning business.
Mhm. Good to hear. That's good. And you mentioned AML risk, which I know you said you had a specific interest and background in. Um, I don't bank at Associated. I am a little bit outside of your region, but I think of you guys as a relatively traditional regional bank. Can you tell me a little bit about how AML is of such importance? Like, why is it something that is such a major risk for a mostly domestic bank?
Absolutely. So we are located in Wisconsin, and our home footprint is primarily the upper Midwestern states. We do have a pretty conservative and diversified customer base, primarily domestic. We do have business and consumers. It is important because there is no industry, there really is no customer base. That is absent financial crime, and even more so lately. It is certainly a trend across the organization, across the industry, across the country, that crime is increasing. And why I think it is so important is we're talking about crime at extreme levels. You have, sure, just transaction fraud, you have ID theft, but you have also, concerted rings of new account online opening threat. You have, we're seeing a large increase in fraudulent counterfeit checks, which has manifested itself with mail carriers, being robbed for their letters. It's identifying Ponzi schemes, human trafficking, elder abuse, romance scams. There's just too many to name, but all of that is a very real danger and very real presence in every state and every city. And I think a bank that is well equipped to help their customers identify it, detect it, prevent it, make them whole or defend them if they've had a circumstance, I think that's really important in a banking partner.
When you speak about mail fraud, a few years ago, I had an incident with a credit card that I had. It wasn't from your bank, just to be clear, where they include those cash withdrawal checks with the credit card, so that if I wanted to take a cash advance, I could get those. I've never used one, but at one point I saw a $3,000 purchase show up on my credit card, and I'm like, that doesn't sound right. And I called the bank, and they said that it was someone had taken the cash advance out of my trash and used it to buy a car. And the car dealer accepted a third party pre-printed cash advance check and turned over the car. And my bank did right by me and returned the money. They didn't charge me for it. And I don't know what happened to the car dealer, because I assumed they were out a car at that point. But yeah, that is a huge issue, and I'm assuming my bank incurred some loss for that, or there was someone lost money along the way. The criminal probably wasn't caught. So yeah, that is a hard type of risk to manage at those kind of dollar values. You're clearly an expert at AML risk. Like, your sophistication in describing the unique risks that face your bank are like so fluid. But how did you get smart on all of the other risk stripes that you were describing when you took over the CRO position?
And in full transparency, I suppose like every leader, there's places where I have more strength than others. There's areas where I employ experts. So one of the most important things is surrounding yourself by the A team, regardless of the topic, and certainly in some of the areas like credit risk or liquidity risk, ALCO risk, where I've had less experience. I make sure we have people who surround us. But I also have done a lot by way of, again, picking up education and training. I have advanced risk certification. Stay very engaged in the peer groups across the industry, as well as organizations that are out there for the risk of professionals of financial institutions. And that really is a constant learning. There is no status quo or end game in risk compliance and financial crime. So it's constantly looking for the right group, the next conference, the next training, to make sure that we're keeping pace with the industry.
And one of the challenges, I think, related to what you're describing of bringing in the right people, is knowing what's the right things for you to do, and what's the right things for people to hire people to do. And I'm an outside counsel, so I often get this when working with in-house counsel at banks, is that there are some things that it's just more cost efficient for the bank to do in-house. That if it's some standard employment litigation, if it's a standard low value real estate contract or something like that, the bank may choose to do that in-house because it's not worth it to bring in outside counsel who's going to do something one time and maybe not build a program. Or there's lots of reasons why you can decide to build it instead of buy it. My perception is there's the same issue with many different areas of risk, of do you build it, or do you buy the expertise from a consultant? Do you have a philosophy for that of choice?
Yeah, for the most part, I very much believe in risk compliance, financial crimes being embedded in part of the organization. There is no reliance agreement that I think is strong enough that if you're not meeting regulatory expectations, that they're going to go after whoever you hired versus the institution. So I believe very much that having experts and programs in-house that can be sustained, scale, and scope is vitally important to the integrity and the depth of the program. Now, there are times that we will bring in a consultant in a new space to help stand up a program or do a validation or take a performance review, maybe an outside opinion or documentation in support of what we've built. So there's certainly a time and place for some outside support in these roles, but for the most part, in the size of organization and our operating model, I feel it's the strongest program it can be with Associated Bank colleagues at the helm.
That's good to hear, and I'm guessing some of those colleagues probably are also in your legal group within the bank who you work with on these issues, but you probably may work with some outside counsel as well. And one thing I like to ask people coming in who have that kind of strong internal network is what's something lawyers could do to help you better, either your own colleagues in the GC's office or law firms like Mayor Brown. What's something you wish you did to help us make your job better?
We do interface very closely with our legal group and the GC. And I think that the best partnerships really, and where we get a lot of value is when we can, of course, get interpretation of some of the more complex things that we're looking at, deposit agreements, language review, those kinds of things. But even when we talk about risk, like, are we going to continue to bank a particular customer? I think the biggest difference between legal and risk is that with risk, we really are driven by needing to make decisions on red flags. There's not necessarily a proven crime, but with red flags, we need to take appropriate action. So by the time that you know you have an issue, it's usually too late. You wish you would have exited a few months before. So the difference between waiting until the crime is realized and
Mhm.
identifying that the red flags are enough to substantiate a decision, I think that that's one of the things that, we certainly spend time in discussion and will err on the side of conservative and understanding that dynamic and the risk that's involved with that is important.
It sounds like my perception is part of that red flag spotting is also judging the materiality of things. That there are certainly some red flags that are hugely material, like in probably in the mortgage business with say email compromise. That's a hugely material thing. One fraud can be hundreds of thousands of dollars. Other types of fraud may be the red flags, even if it's realized, it's not as material. And other types of risks probably aren't as material. How do you manage that materiality when you are identifying or monitoring for risks?
Yeah, there is definitely materiality. I mean, if we're looking at a transaction and there's red flags for a Ponzi scheme or human trafficking, those kinds of things, we're going to stop immediately. We're going to bring in law enforcement according to, the information sharing in other organizations and take immediate action. Red flags at that level is something that we feel you need to have immediate, urgent and responsive. Whereas, of course, there are some others where it's like not as large of a deal, a red flag that, they might be selling their vehicle for cash and, and did it so in a way to not file a CTR. Certainly
Mhm.
not okay, but it's not like we're stopping, everything to have an immediate conversation about it.
Exactly, that makes a lot of sense. And part of that one aspect of that monitoring process I've heard about, and again, I used to be an accountant, so I can appreciate a little bit more of the consulting side, is that it seems like consultants love to sell dashboards to growing banks like Associated. And since you've seen the bank grow so much, you've probably seen it grow into a place where consultants have sold dashboards of here's how you can monitor your risks. Here it'll show you a red flag. And there can be a little bit of complacency that as long as the dashboard is all green, um, then you think maybe I'm doing a great job managing things. Um, how do you guard against that kind of monitoring complacency now that you are a larger bank, you have a staff of people, you're relying on technology in some ways to help you assess the risks?
Yeah, for the technology that is typically alerting us to some sort of suspicious behavior or anomaly, typically we're able to tune them ourselves with parameters. So it is really ours to control at what level or sensitivity. We have to make sure you do balance, you don't have alert fatigue, that you've got the right amount of, you're casting the net just big enough to be effective, but not so big that people become complacent in what they're doing. If you apply that into enterprise risk management, where now you have KRIs and dashboards of every element of risk of the company, again, you need to make sure that they're at the right level, that they're guardrails. You're having a conversation before the wheels are off the bus, but certainly that people understand that if you are bringing forward a breach in a KRI that was set, that it's material enough to get action or discussion all the way up into the board of directors.
A lot of these things that we've been talking about are things that you as the chief risk officer can control. One trend I've heard about and that I've seen that is maybe something that is putting CROs in a little less comfortable space is how courts are focusing more on boards implementing risk oversight systems. So not risk management, but risk oversight for mission critical risks. There have been some recent cases out of Delaware. We did an article recently on the legal issues associated with it. But there's an obvious compliance overlay that the way they do that risk oversight is by using your systems, your reports, your information, and directing you on what to do. How is this particular trend affecting your daily job, your quarterly interactions?
Yeah, I think that this is an extremely important piece of a chief risk officer's role. We are required and do need to bring forward to, in my case, the Enterprise Risk Committee of the board, information at an adequate level that they can understand, digest the material, offer effective challenge, and feel positioned to provide guidance and oversight. They are required to do that. And so, how does it change or shift? It's a balance, first of all, I'd say. When you first get going, I'm going to throw 1,000 pages at them to make sure that there's nothing that's missed,
Mhm.
knowing full well that there's no way that a board can be effective digesting that amount of information. We need to be prudent in what we bring forward. We need to be, I think, very succinct in how we bring it forward. And then we need to help direct the conversation so that their focus is in the right place with the time that we get. So we have a lot of conversation about what goes, when it goes, how it goes, and the reporting that offers them an informed discussion and effective challenge opportunity. And I think the chief risk officer does have a great responsibility to ensure that that works to make the board as effective as they need to be.
That's great. Well, I want to thank you for joining us today, Nicole. This has really been, I think, a great session. And before we sign off, I want to give you an opportunity if you have any guidance out there for young lawyers, young risk managers, people just getting started out like you once were at 17, maybe even before going off to college, about what they can do in banking, what they can do in risk, and what you think that they could benefit from your experience.
I would say that certainly be aware that there are more careers and opportunities in financial institutions than I think most people are aware. I think that the ability to be at any level of skill set within many of those positions exists. And I would suggest that ongoing learning, finding some effective mentors and coaches, and then being willing to take the risks and the challenges of making some shifts in your own career to see the world from different sides. All of that, I think, strengthens the overall skill set and experience. And certainly in risk and compliance, where you need to tie all the pieces together to be effective, I think that makes for a much better risk officer.
Great. Well, Nicole, thank you. It's been a pleasure talking with you on today, and I think our listeners will greatly appreciate it. And to our listeners, thank you again for tuning in. We wouldn't be here without you. And please stay tuned for the next episode of Credibly Challenged. Have a great day.